Gold and Bitcoin. One's been trusted for thousands of years. The other was created with code. One you dig from the earth, the other you download from the internet. But despite their differences, they have something important in common. Both are better than holding cash while it slowly burns a hole in your savings account. In a world of rising inflation, record debt, and financial uncertainty, these two assets are at the center of the conversation about preserving wealth. Let's break down why and why owning both might be your smartest move. Let's start with gold. For thousands of years, gold has been seen as the ultimate store of value. Ancient civilizations used it for trade. Nations once backed their currencies with it. And to this day, it remains a global symbol of wealth. Why? Because gold has fundamental strengths that stand the test of time. It's scarce, but we can't manufacture it. It's durable. It doesn't rust or fade. It's recognized and trusted around the world. And during periods of inflation or crisis, gold has consistently held its value. Even now, central banks continue to hold gold as part of their reserves. In times of uncertainty, like the 2008 financial crisis, gold tends to rise in importance. People trust it when everything else feels shaky. Now let's talk about Bitcoin. Created in 2009 by the mysterious Satoshi Nakamoto, Bitcoin emerged as a direct response to the flaws of traditional finance, especially the endless printing of money by governments and central banks. At its core, Bitcoin is digital money with a fixed cap. Only 21 million will ever exist. It's decentralized, meaning no single authority controls it, and it's secured by blockchain technology, which publicly records every transaction and prevents fraud. What makes Bitcoin powerful is how accessible and portable it is. You can send it anywhere in the world in minutes, you can store large amounts on a tiny device, and no government can freeze it or block a transaction, making it especially valuable in places with censorship or unstable currencies. So how do gold and Bitcoin compare? Both are scarce. Gold must be mined and refined. Bitcoin is limited by code. Both are independent of fiat currencies and central banks. But Bitcoin is far more portable and divisible. It can be split into 100 million satoshis. Gold, not so easily. Gold is physical and doesn't need electricity or internet. Bitcoin is digital, requiring tech to store and use. Gold is trusted through centuries. Bitcoin is still earning its place. But adoption is growing fast, from individual investors to institutions and even nations. So, which is better? That's the wrong question. They serve different roles. Gold is a symbol of long-term financial security. It's proven, it's stable. It's used by governments and investors to weather economic storms. Bitcoin represents financial independence in a digital world. It's borderless, fast, and not controlled by any authority. It gives people in broken financial systems a chance to protect and move their wealth. The smart move? Consider both. With over $300 trillion in global debt and rising inflation, the financial world is changing fast. Relying on just one asset class may not cut it anymore. Gold brings stability. Bitcoin brings potential. Together, they offer balance, a hedge against both traditional risks and modern ones. That said, both come with challenges. Gold can be expensive to store and hard to use for daily transactions. Bitcoin is more volatile and faces regulatory uncertainty. Lose your private keys and your coins are gone. But no investment is risk-free. What matters is understanding those risks and building a plan that fits your goals. So ask yourself, are you relying only on the past or preparing for the future? Because in a world that's shifting fast, gold and Bitcoin might both have a place in protecting your wealth. Let me know in the comments, which do you trust more, gold, Bitcoin, or both? And if you found this video helpful, don't forget to subscribe for more. Thanks for watching.